just thankful to have all of you here because financial statements, I'm quite surprised. Who's really that interested? I want today to be valuable, for all of us to have some takeaways. So again, I just want to say comfortable environment, as many questions as possible. That's what we're here for, so that we can make today a valuable session. So the first thing that we're going to start talking a little bit about what a balance sheet is. And I find that in a lot of circumstances, the income statement is a lot more comfortable to you when you're reading your financials and when you're trying to understand what's going in your business. But the balance sheet is sometimes a little bit more complicated as to what it means. And it's really a snapshot of your business at a point in time. And it's an accumulated snapshot. So your balance sheet will tell you what your total of your assets that you've bought over the years that are still on the books and that haven't been depreciated. It tells you at a point in time your liabilities and what's there and what you owe everybody. And it also tells you how you've been financing your business in the equity part of your balance sheet. So where are you getting your funding from? Has it been share capital? And also, how has your business been performing over time? So how the two statements are linked. So you have your income statement and you have your balance sheet. And what happens in your balance sheet is every year you have a net income or you have a net loss. And that net income or that net loss flows through into your retained earnings on your balance sheet. And that's an accumulated total of how you've done over time. And then your income statement at the end of the year, once it clears into retained earnings, your income statement zeroes out and you start fresh. So that's how it is. We'll kind of walk through that in the example when we're going along. Okay? So your balance sheet is cumulative and it's a point in time. Okay? Income statement. Again, something you're probably a little bit more comfortable with. Your income statement is like your report card, and it tells you how you're doing this year. It gives you your revenues, your sales, if you have them, and it's giving you your expenses and what you're spending your money on. Okay, and at the end, your result is either your net income or net loss for the year. Okay? And then that flows through again, that net income or loss gets added into the retained earnings on your balance sheet at the end of the year. Okay? Cash flows. So I can't stress to you enough how important the cash flow statement is. And the challenge around the cash flow statement is that it's so difficult to get your systems to do one. It's difficult, it's a technical statement, it's hard to understand. I'm not going to teach you today, it's probably a day-long course on how to do a cash flow statement. But I will point out some things for you to look at. And we'll point out some tips on what people, outsiders looking in potentially down the road, either investors or banks, or what they're looking at. But the cash flow statement really tells a very important picture and helps you run your business. So is your business generating cash from its operations? So are you generating positive cash flow? And initially when you start your businesses, that's not usually the case. You're usually spending a lot more than you're bringing in. So your cash flow from operations is quite often negative. But over time, that number needs to become positive. And that number, cash flow from operations, is critical. Critical to investors, critical to banks, VCs, angels, funders. Very important number. Okay? So your cash flow statement is critical. It also tells other stories for people who are reading it as well, where you're getting your money from, and what you're spending your money on from an investment perspective. Have you been buying assets during the year? It'll tell you that. So the cash flow statement is probably one of the most critical statements and probably one of the more challenging statements to get out of your system. What you spent. You probably all work on cash flow forecasts moving forward to be able to say, okay, here, I've got a little bit coming in here, Going to collect some receivables, going to pay some liabilities, got some expenses. And it tells you a little bit in the future what you're going to need or what you're going to have to do to fulfill your cash requirements. But this statement tells you what did you do in the past. So just kind of keeping that straight. Okay. So the importance of these statements, again, super important to be looking at these on a regular basis because they tell you a story. They tell you what's happening in your business, how you're spending your money, and it allows you to make decisions. So if you're looking at them on a timely basis, you can make decisions to either correct things that you haven't made, decisions you haven't made, or it also highlights areas that maybe you've overlooked. So, for example, in sort of a couple years ago, my husband and I own a business together. We own a retail store. And when, I think it was October 2008, things were going really bad, economy is doing this, sales dropped off, and we always have had an extra person in our business to help us with flexibility so that, my husband could help with the kids and be around a little bit more. So we go along and 2008 comes along, we crash. Husband doesn't look at the financials. I'm too busy to look at the financials. It's supposed to be my responsibility, apparently. We go on, and all of a sudden in December, we have no cash. We can't make payroll. So our sales have dropped so much. We've got extra people in the business. We're not looking at our financial results. We're not looking at our cash flow forecast. December comes along, we got no cash. Go to the bank. Oh, we just need like $20,000. Just help us, just a little bit. Anything you can give us? They said, well, why didn't you call us 3 months ago? You should have known you were getting into this position. You should have been looking at this way before now, where you're in a critical position. So the bank said, forget it, you're on your own. So then we had to come in and we injected cash. We got it from God knows where, the tree in our backyard, and injected it. But if we were looking at that back in October, realizing we got a problem, looking at our cash flow statement, if we would have called the bank 3 months before it happened and said, here's where we're going, this is our problem, this is what we're going to have, they would have given us that cash. So it's very, very critical for you to be looking at your statements so that you can identify when you're going to be getting into these situations.